With 4 of the Magnificent Seven reporting earnings in the past 48 hours, Apple, Meta, Microsoft, and Tesla, investors are making sense of what's next for the tech sector. Joining me now to help add some clarity is Mike Coe. He's the strategist at YieldMax. Mike, welcome.
Thanks for having me.
So what stood out from you most from these earnings reports from these Mag 7 companies this week?
I think it was an interesting reaction that we got out of all of them. Starting with Microsoft, I thought their numbers were actually quite solid. We're still seeing, high teens in terms of their revenue growth. They're generating massive amounts of free cash flow. So one would think that the investments that they're making are well covered by their existing operations. Yet obviously the street didn't like it very much. And we saw the stock pull back fairly materially. Although from our perspective, with the strategies that we run, that's not that much of a problem really, because when the stock pulls back, one of the things that typically happens, that added uncertainty elevates options premiums. And because the strategies we run use options and are selling options premium, call spreads against long stock, we benefit from the fact that the options premiums are probably 15 to 20% higher than they have been over the course of the year, just looking at 1 month implied vols. But when we take a look at Meta, I think obviously the results were also very good. The market does not seem to be very concerned about the investments that they're making, despite the fact that I know that there's a little bit of off-balance sheet debt that's being added there. Volatility is pretty stable. And then when I take a look at Tesla, I think Tesla is also very interesting because, of course, it's not valued at all like a car company, and it's not really valued the way the other tech companies are. That's a story that's very much about, Elon, I think, his vision for the future, robotics, full self-driving, the taxi. And then, of course, I think fairly material announcement that really what put them on the map, which was the Tesla Model S, and then secondarily the X with their, with the gull-wing doors that they're going to discontinue those cars later this year. But, that's obviously justified by the business that they're doing in the 3 and the Model Y.
And we're seeing more companies make a push toward AI. Of course, you just mentioned Tesla really shifting beyond traditional car manufacturing toward automation and AI. And as the year unfolds, where do you think AI is going to have the biggest impact?
Well, when I think we're looking at Tesla, I think the most important thing for them is really the robotics story, because I think that's the product promise that Elon is making. I think that's the reason why the company enjoys the valuation that it does, because it's really not, I don't think you can take a look at Tesla's valuation and comp it with any of the other Mag 7 names, and you can't comp it really with the other legacy automakers at all either. So it's kind of its own story. And then, of course, we also have there's always some buzz about whether some of Elon's companies are going to merge, and then you can sort of incorporate, because his vision very much includes SpaceX. He has ideas for data centers in outer space. So some really some very futuristic plans, and that's priced into the stock as well when you take a look at its multiple for sure.
All right, and Mike, you manage several NYSE-listed single stock option income ETFs, including the Tesla Option Income Strategy. How are the options markets pricing risk among the volatility?
It's a great question, because when you think about it, if you think about how Tesla is pricing in all of basically these visions that Elon has, one might think that the options premiums would be going higher along with the stock price and sort of with those visions. But in fact, Tesla's implied volatility, the price of options, has been drifting steadily a little bit lower throughout the year. Meta has also sort of stabilized here, and Microsoft's is a little bit higher. So as we take a look at this, it's basically the inverse of the response to earnings. It's an inverse of the price action in the stock. So in other words, when you sort of see a stock like Meta do very well, or at least hold in there after earnings and things are well received, then you're going to start seeing options premiums come in. It reflects the fact that the sentiment among investors is, okay, I think we have, we have a better understanding what's going to be going on in the future. So it's a little bit surprising to see a convergence in the price of options between these 3 stocks. Microsoft's has been drifting higher. It's actually well above the average for the year. And Tesla's has drifted in a little bit. It's actually well below its average for the year. That's not to say that Tesla options are less expensive than Microsoft's or Meta's. They're not. but they are getting closer to one another. So it's sort of as if there's an intersection in all of these themes and in all of these companies.
All right, thank you, Mike Coe, strategist at YieldMac, for joining us on NYSE Live.
Thanks.